Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing two articles, to where the first one is titled 3 Smart Reasons to Buy Palantir Stock Right Now. So clearly, we're going to be going over their latest news updates, price targets, upcoming catalysts, and if this company is a good investment to buy into. After that, we're going to be comparing and contrasting their bullish scenario and their bearish scenario, because the second article is titled Palantir Technologies stock, bull versus bear. And the bullish case is the positive aspects of this company, while the bearish case is the negative aspects of this company. And we're going to be comparing and contrasting them, whether or not the bear or the bull case is superior. So if you want to know more about Palantir Technologies, what their upcoming share price could be, and how high the company could actually go on a per share basis, don't forget to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents to support me personally, because that's what keeps me here on YouTube. But if not, don't worry, by subscribing you're going to get this content for absolutely free. And with that being said, let's jump right into today's stories. Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government clients, and they also specialize in artificial intelligence. And we're going to start off talking about an Alex Karp quote, which he said during an interview with Bloomberg back in the beginning of August, where he said that we have a good chance at becoming the most important software company in the world. And that is a huge accomplishment. And I really like the goals that Palantir has set for themselves to become literally the most important company in the world in regards to software. However, let's see how realistic this actual goal is. So we're going to be going over some of the reasons why you may want to consider either buying or doing more research into Palantir Technologies and potentially adding them to your stock portfolio. Right now, the PLTR share price trades for $14.59, while on the lower end, bearish negative analysts and critics of this company think the company could fall to as low as $5 per share over the next year, while other analysts believe this company could surge as high as $25. And in this video, we're going to be focusing on that $25 share price from a very prestigious analyst. So not only are we going to go over why that analyst believes this company could achieve $25 per share, but we're also going to go over why this company could achieve this price target in the next 12 months and how realistic it would be for this company to achieve that in that time frame. So let's start off with our first reason, and that would be the CEO. The CEO, as well as the management of Palantir Technologies, knows exactly what they're doing, and they have made it clear to mention to investors that their strategy is focused on artificial intelligence, and they plan to literally take over the entire AI market, meaning that Palantir is not only going to be a market leader in their respected industry, but also this entire AI space, which means they're going to compete against companies like Google, Amazon, Apple, Microsoft, and others, at least in the artificial intelligence regard. So clearly, this is a very audacious statement that management and the CEO made, particularly when we consider the potential size of the overall AI market. There are going to be formidable competitors in this market, like we just said, and despite this fierce competition, management is confident that Palantir is going to obtain a huge piece of the pie of the overall AI market. Palantir's CEO and management isn't the only one that believed they could do this, because a very prestigious analyst known as Daniel Ives from Wedbush, which is an analyst that I personally follow, and I believe that he is actually a good analyst among the plethora of terrible analysts out there, said, and I quote, "We believe Palantir has built an AI fortress that is unmatched and poised to be a major player in this AI revolution over the next decade." This is very good news, so if you are a long-term investor such as myself, that is exactly what you want to hear from such a prestigious analyst about a very fundamentally solid company. This analyst also believes that Palantir is set to capture a sizable portion of the overall AI applications market, and considering that this market is anticipated to grow up to $800 billion within the decade, we could see Palantir's share price jump by more than 70% up to $25. The second reason for this bullish stance is their customers. There are existing Palantir customers that love their technology, and then there is also a huge untapped market that Palantir can break into. For instance, their largest market actually involves the United States government, or just governments in general, because government organizations partner with Palantir, which means that Palantir is very reliable, especially in regards to their overall information and analytics advantages that they have over their rivals. But Palantir also does business with commercial enterprises and clients due to their AI-driven insights in which they can give the company. For instance, Palantir already works with very prestigious companies, including companies like Ferrari, and they also work with various pharmaceutical giants as well as financial institutions. So Palantir is almost like a best-kept secret in the commercial space, but once the word is out about the capabilities of Palantir and the positive impacts that it has on these companies revolving data-driven decision-making, such as pricing, supply chain, and overall efficiencies, Palantir is going to have more than their hands full from a plethora of companies. And last but not least, Palantir has robust cash flow, which enables them to return capital to shareholders. Unlike other machine learning and artificial intelligence companies, Palantir is actually profitable, and once they achieve profitability in the upcoming earnings report, it will allow them to potentially be added to the S&P 500, which I think will happen. It's just a matter of time. For instance, just in the second quarter, they brought in operating profit of $10 million, and if we combine that with the strength of their balance sheet, where they have over $3.1 billion with a B dollars in cash and or investments, and a $1 billion buyback program, this company is set for future potential only if you are a long-term investor. So the best thing to do with Palantir Technologies, in my opinion, is dollar cost average into it, or have Palantir make up around or close to 5% of your overall portfolio, lock that baby in, and then move on to another stock and just wait for this company to cook and build value over time. Because at times this company is going to be very volatile in their share price by surging and then dropping very dramatically, but if you have the stomach to hold this company through those volatile times, this is going to reward you over the long term. So you need a long-term aspect when investing into this particular company. But now let's weigh the advantages of the bull positive case against the bearish negative case. Palantir Technologies is arguably one of the most controversial stocks on the stock market right now, which is why we always need to pay attention to both sides. We need to be aware of the latest bull arguments and the latest bear arguments, because if the bear argument ever supersedes the bullish argument, then we would want to sell this company. But let's see if that actually holds up to scrutiny, which is why we're going to be diving in and talking about the best case for Palantir and the worst case for them over the long term for investors such as yourself. So let's just dive right into it. Palantir literally is the key to long-term growth if you want to be exposed to the artificial intelligence market. And since they are a data and analytics company, data is absolutely crucial for various commercial enterprises that are competing with each other in the private sector. So Palantir could give certain companies an edge over their competitors. This is why their United States commercial customers grew by over 50% year over year in the first quarter, and it grew by another 35% during the second quarter. This means that commercial enterprises are catching on to this, and eventually their true growth will be actualized in terms of their commercial clients and not necessarily their government revenue segment. On top of that, Palantir released their artificial intelligence platform, also known as AIP, roughly 10 weeks ago, and management has already reported unprecedented interest in this platform. So it seems that Palantir is still coming out with newer and better platforms which are attracting more and more customers. Like we've already talked about, their financials and fundamentals are absolutely paramount to the success of this company, and they look primed for future growth. Now, let's go over some of the bearish negative critical points about this company. First, I want to start off by saying that even when you identify an excellent investment, there will be drawbacks. You're never going to find a perfect company. Those just don't exist. And the first problem with Palantir is going to be their stock-based compensation. Since they've gone public, they have had a huge problem with this. Essentially, they pay their employees in stock-based compensation because this improves their cash flow. However, this does lower the value of existing shares over time with this dilution. But the positive end of this is that it allows Palantir to pay their engineers top dollar so they can steal talent from other larger institutions and companies to bring them into Palantir's fold so they can make even bigger and better products for them. So it's kind of a double-edged sword there where there is a positive and a negative attached. Next, let's talk about Palantir's revenue growth rate. Palantir has declined in their revenue CAGR from 52% year over year from the third quarter of 2020 to around 13% during the second quarter of 2023. So there is a huge decrease in the overall growth rate of Palantir Technologies. Now, with that being said, management is expecting for them to return their CAGR, which is their compounding annual growth rate, up to 16% year over year in the third quarter, and eventually this should return to close to 20% on average over the next half decade. And that is very good. That's exactly what we would want to hear. So both bulls and bears have legitimate arguing points for this company, but ultimately only time will answer the question on if this is a good investment. But it seems that the risk is certainly worth the reward in this instance, at least right now. The only problem that I personally have with the company is that their forward PE ratio and PS ratios are too high. For instance, let's take a look at their forward price to earnings ratio, which is close to 69. This means that this company is very expensive and they are not making enough earnings to offset the risk that you are buying in terms of their overall share price and market capitalization. Now, what does this mean? It essentially means that you are not getting a good deal for this company right now and that they still need to grow into their overall accounting ratios by increasing their overall earnings and profits. Over the next 5 years, Palantir is anticipated to grow their overall EPS by 56% annually on average. After the 5 years, this would result in a price-to-earnings ratio of 1.2, which is absolutely phenomenal for a long-term investment. So, if you have a 5-year time horizon and you're willing to hold this company at a loss potentially for the next 5 years, then from that point onwards, this company is going to absolutely skyrocket. And that's why I personally hold this company. I am a long-term investor. I have no problem of holding companies as long as their future is very bright and the accounting ratios check out. I've been invested in this company even before they were profitable, when I predicted that they would become profitable. And then I also predicted, which is yet to happen yet, that their commercial revenue will outpace their government revenue and be their main source of revenue. But that's just a matter of time. And I also predict that they will join the S&P 500. But these predictions are yet to come true, but I believe that they will, just like my previous predictions for this company regarding how they have become true as well. But I would love to hear your thoughts down below. Don't forget to go and annihilate that like button. Tell me what you think of the company. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents. And with that being said, I will see you in the next YT video.